Hey traders, this is Jeff. Not a good day for me today. I had a root canal. My allergies are acting up, and or I just got a cold. I don't know what it is yet, to be honest with you. So, not the best day for me. But I wanted to talk a little bit about the markets. I haven't really been able to put anything up on the blog here for a couple of days. Not a whole lot. It has developed really, but there are some things worth pointing out. And the first thing is Nasdaq 60-minute chart here. I want to talk about my timing signal gave a go to the sidelines signal late last week. You can see here right when we broke down with this this upward rising channel that we've been in, and we bounced back, and you can see now the character of this rally. There are starting to be some cracks in it. Number one, this was the first time we actually broke below the trend line. Now we closed below it. The RSI before was really channeling between 50 and 80. Now it's starting to channel between 40 and 70, so the relative strength of the Nasdaq is starting to waver. I really think the sidelines, if you're doing short-term trading, is going to be the place to be. It's okay if you want to pick up some stocks maybe for the longer term, but I think that we're going to get a correction. I've been saying this for a long time. Either a correction, a sideways market, and if it's a sideways market, then it's going to be pretty much a stock picker's market. Those stocks will go up as the general market consolidates. So that's always a good market too. I feel like I'm a pretty good stock picker. So either way, the sidelines, that's the safest bet. But what's interesting here is the Dow is starting to show a little bit more strength than the Nasdaq has of late, whereas the Nasdaq has been the strong performer. This isn't exactly the most bullish activity they could have had. It broke out above this range that it's been in since mid-January, not really in convincing fashion. We do have some negative divergence. If you can imagine a line connecting this high to here, there's negative divergence forming on the RSI. Not really a good thing. You want to see that RSI breaking up to new highs. Like from here to here, you can see the RSI is strong, but whereas from the RSI was stronger when the Dow was lower versus now. So that's not that great of a sign. We'll have to continue to watch that. This is the Nasdaq daily chart, and really I just want to point out here, the ADX above 50 is pretty extreme. Most of the time it's a sign of extreme, just an extreme bullish indicator that the market or stock for that matter really needs to consolidate and pull back. That's really all I got to say about that. All I know is when I look at the ADX on like smaller time frames that I use 60 or 15, and you see an ADX this high, I really try to stay away from it, from buying it, because I just know it's going to undergo some sort of a correction. So just be aware of that. The TSX, which I was starting to get very bearish on last week, I thought it was going to trigger a long-term sell signal, has really strengthened its position over the last couple days. Part of that is the strength in gold and mining stocks, which had a good day today. So this may save itself. I pointed out some support here a long time ago, and it's basically it held. It basically didn't even touch it. So that's even a stronger case. So the fact that it's come back and is at yearly highs, that's a good sign. So we'll continue to watch. This market may continue to go higher. As for now, that near long-term sell signal is off the table. And then really, this is just a matter of time basically, but you can just pause this, take a look at it. This is the Nasdaq advanced decline. We're really in a resistance area.